Good morning. You're watching Businessworld Live here on One News. I'm Jess De Los Santos, and here are the biggest stories to kickstart this trading day Friday. More short-term foreign investments left the country in March, ending 2 straight months of hot money inflows. Metro Manila's economic output rebounds in 2021, but the region's growth remains among the slowest in the Philippines. The Bangko Sentral slapped sanctions on BDO and Union Bank over an online fraud that took place last December. And have you ever heard of Fire? The SEC warns against this unauthorized firm, saying it is not registered to solicit investments. We begin our broadcast with more short-term foreign investments or hot money exiting the country in March. Fresh data from the Bangko Sentral showed that hot money yielded an outflow of more than $305 million in March, a reversal from the $274 million net inflow in March. Last month's outflow was also the largest in 8 months. Economists said the exit of hot money reflected the volatility in international market due to the ongoing war in Ukraine. Meanwhile, the government looks to borrow up to 200 billion pesos from the domestic market next month. This borrowing plan is the same volume programmed for April. However, the government was only able to raise 160 billion pesos last month. Economists said government borrowings could pick up again after the election. The BSP is slapping sanctions on BDO and Union Bank over the massive online fraud that affected hundreds of BDO clients in December last year. The Bangko Sentral has finished its investigation into the online fraud incident that involved unauthorized access of BDO accounts and fund transfers mostly to Union Bank accounts. The central bank did not disclose the actual sanctions that will be imposed on the two banks implicated in the so-called Nagoyo scam. The BSP just said they took into consideration the corrective actions implemented by both banks after the cyber incident as it decided on the proper sanctions. UBP President Edwin Bautista said the BSP did not impose monetary penalties. Now, Metro Manila's economy has bounced back last year from a double-digit contraction in 2020. The region's economic output expanded by 4.4% in 2021, reversing the 10% drop in 2020. However, this was still lower than the growth we had in 2019. Metro Manila's growth was also well below the Philippines' revised 5.7% GDP last year. Data from the PSA also showed that NCR's growth was the third lowest among the 17 regions, only ahead of Bicol and Mimaropa.
If you will differentiate some of the regions and the cities, mas maraming lockdown ng NCR. So we can see that na tayo, I think that was February and March, talagang almost a month. So that is also a contributor. Kapag nagkaroon ulit ng lockdown, the sectors that will be greatly affected are the tourism, the hotel accommodation, and the transportation sector. Kasi nakita naman in the previous years at experiences, yan talaga yung matinding tinamaan.
Metro Manila has been placed under Alert Level 1 since March, and the government has just announced that the region will remain under this classification until May 15. Moody's Analytics is penciling in a slower growth forecast for the Philippines from its initial forecast of 6.4%. They've cut projections to 6.1%. To find out why, we have on the show their chief economist for Asia Pacific, Stephen Cochrane. Steve, good morning. Thank you for joining us today.
Good morning.
All right. Again, you've cut your forecast from 6.4% to 6.1%. That's still way below the government's target, even your previous projection here. What key risks are you looking at here?
So the biggest risk right now is simply an increase once again in inflation. You know, the inflation number for March came in at 4%. That was well above the previous months of 3%. And my expectation is that April inflation will probably show some acceleration further. A lot of this, of course, is due to higher energy commodity prices, crude oil and refined oil products in global markets. And this means that there'll be greater expenditures that go to imported goods, which means a little less capability for consumers and businesses to buy locally and to drive the economy forward. So I suspect this is a temporary impact. Fortunately, right now, we at least see global oil commodity prices not falling, but at least they've stabilized. If you look at Brent crude oil, the global benchmark, it's a little bit volatile, but ranging between $100 and $105 a barrel over the last couple of weeks. That's a good sign that at least things have been stabilized there, and inflation may look better in the second half of the year.
Okay, since you've already touched on inflation here, can you nuance that a bit more for us? How long do you see commodity prices remaining elevated? And this also is not really much of an isolated case here for the Philippines. It's a regional thing.
That's exactly right. It is a regional thing, and it adds weight on the broader Asia-Pacific economy. At least Asia is less exposed to some of these inflation impacts than is, say, North America and Europe, because there's a lot of strong domestic demand in Europe and North America that adds to the inflation pressure as well. I do expect if things go reasonably well in terms of finding some resolution to the conflict of the Russia-Ukraine crisis, or at least managing sanctions, that we can see a little bit of easing perhaps in terms of global commodity prices in the second half of this year. Right now, we include assumptions in our own forecast that we'll see a peak in terms of global commodity prices by about mid-year, and then a little bit of easing after that. I will say there's a lot of uncertainty with that, but that seems to be a reasonable assumption at the moment.
Now, Steve, given that, how crucial is it that the BSP stays true to its most recent signal that there's a possibility that they're going to hike rates by June? I mean, how much of a space do we have here to remain accommodative?
I think that space is getting narrower and narrower. We'll see where inflation goes. We'll see what the April print is on inflation in the Philippines. And we'll also have to watch how quickly the Federal Reserve raises rates. It's pretty clear that next week they will likely raise the federal funds rate by 50 basis points. And then I'm sure BSP will be watching for the next month's hike as well to see if it will be another 50 basis points. If they go that fast and if inflation stays high, then BSP may have to move more quickly than they would like to.
Okay, how much of a tightening do you see would be fit, at least for the year?
For BSP? Mm-hmm. If they have to tighten this year, I think maybe it would be gradual if possible to avoid any real disruption in the economy. And if they do a couple of 25 basis points hikes, I think that's a reasonable assumption.
Mm-hmm, mm-hmm. Now, of course, going back here to our growth targets again at 6.1%, should we expect slower growth, even slower than 6.1%, should the country experience a new full-blown wave of infections? I mean, the most recent report on that is, of course, the Omicron subvariant BA.2.12 has already been detected in the Philippines. That has been spreading across South Korea and even in the U.S. Yeah. How much of a worry is that? Should there be a new surge in infections?
I'm less worried about it now. I mean, there's I've always assumed that there would be some other wave. Perhaps there will be multiple waves still to come. But the Philippines has learned how to deal with the coronavirus in a fairly effective way. I think the key here is going to be to make sure that the public health system is sufficiently funded to be able to manage serious cases so that serious cases can be taken care of, to keep the death rate low, while those who are not serious can be treated at home. But with most countries looking at managing COVID as an endemic virus, I think we'll get through it pretty well. Perhaps the biggest risk is comes from a distance, really, from China. If China maintains its pretty strict near zero COVID policy through the end of the year into next year, that could create disruptions again in some of the supply chain stress that the global economy has seen. The Philippines certainly has felt it. That would probably be the greatest risk from another wave of COVID at this point.
Okay, that's one major risk that we have to keep an eye on, again, what's happening in China here. But at the same time, you have Finance Secretary Carlos Dominguez telling Bloomberg that the Philippines needs to grow at least 6% over the next 5 to 6 years. So that's basically the next administration's term. How achievable is that for us to reach that level in order for us to grow out of our pandemic-induced debt?
Yeah, I think that's a possibility. It'll take a lot of work and some very well-focused policies to make that work. Fortunately, the Philippines has an expanding labor force, which is one factor that really creates some good potential growth in the Philippines and is one of the Philippines' better advantages over its neighbors in Southeast Asia. There will have to be a concerted effort at trying to keep inflation low, particularly food inflation, so keeping the cost of food low, maintaining local domestic food production to keep inflation low. I think infrastructure spending will be critical. That will be very important to improve productivity, and improved productivity will really be the way that the Philippines can manage a 6% growth rate. And then also the capability of continuing to attract foreign investment. I think that'll help to increase capacity and to bring advanced technology into the country, and again, provide employment and income and improve productivity.
Okay, again, Steve, of course, much of that growth will depend on the next administration. Speaking of which, we're less than 2 weeks away from the next elections here. What policies should the next president have on the table? What should be in focus here? And so far, among what you've heard from the economic agenda of the candidates here, do their policies at least spark any confidence, especially when we're talking about at least the two front runners here? It seems as though it's going to be a two-way race here. Do the policies, at least that they have so far delivered, spark any confidence of a possible economic rebound?
I think from what I hear, I think the policies are going in the right direction. Certainly the support to continue the improvement of infrastructure, something that was well in place before COVID hit, and then of course was on pause during the pandemic. So the reacceleration of infrastructure spending is important. I also think training and education, reskilling of the labor force, focusing on labor force skills to meet the needs of the post-COVID economy and to help improve incomes is very important as well. I mentioned a third factor earlier, the capacity of the public health system. I think this is going to have to be a very important component of policy as well, to be able to manage what probably will be, multiple rounds of COVID or other viruses coming through over the next several years. And I think that'll be very important to manage them and to also improve confidence of businesses and investors that any pandemic wave will not interrupt the economy.
All right, again, these are things that we have to be keeping an eye on, especially for your time this morning. Stephen Cochrane, Chief Economist for Asia Pacific over at Moody's Analytics. Thank you, Steve.
Thank you.
Now, coming right up after the break, we'll check how our local bourse is performing this morning after finally snapping 2 straight days of losses. More of that and other stories when Businessworld Live returns. Stay with us.
Tahan kung
Paalam
saan
ka.
yan.
Speaking of staff, mga kapatid, ito ho, ating pong binibigyan po ng pagpupugay at pasalamat ang naghihirap po araw-araw sa ating
All right, you're still watching Business World Live here on One News. I'm Jess De Los Santos. So let's get right to the local bourse here. 20 minutes into the trading day, you can see here the index reversing track after gaining yesterday. The PSEI at least down today by over 0.5% to 6,871. That's after it rose finally on Thursday, snapping 2 days of losses here. Gained close to 0.7%, ending the day at 6,900. But that's amid bargain hunting, says Darren Pangan of Timson Securities. He says investors may be weighing in on earnings reports that have been released over the past few days. Externally, though, according to Luis Limlingan of Virginia Capital, market players are on wait-and-see mode over how other tech firms will perform, particularly the likes of Apple, Amazon, and Twitter, among others. But speaking of earnings, domestically, we might as well take a look at some gaming stocks here. That's after Premier Leisure, a major player in the integrated casino market, reported lower first quarter sales and income. Looking at how they performed here, gaming share revenue and income from equipment rentals fell 19% to 448.4 million pesos. That, of course, resulted with net income down by close to 6% to 292.8 million pesos. The company did say that casino operations continue to face substantial limitations, including restrictions in inbound international tourism. Looking at how Premium Leisure at least performed for the day, it is so far in the green here, pricing at 48 centavos a share. Pulling off at least an increase of as much as, let me just try to check on the chart here. It seems as though the terminal is lagging here, but you can definitely see here Premier Leisure is up again at 48 centavos a share. Looking at how that is affecting other casino players here. Let's try to see, though, we're having a bit of a problem here with our terminal. But earlier, before we went back on air, we did see the likes of Bloomberry somehow gaining in the day. But there are other players here, the likes of Leisure Resorts and Alliance Global, however, experiencing a bit of a sluggish start to the trading day. Now, one other sector you have to be keeping an eye on, that has to be the banking space, as after the BSP decided to slap sanctions on BDO and Union Bank. The central bank, however, did not disclose the nature of the sanctions. However, we did hear from Union Bank President Edwin Bautista, who did say that no monetary policy penalties were granted here, but they did indeed asked to increase their capital charge against operational risk. Now, he did say that BSP's recommendations have already been implemented. BSP Governor Ben Jokno said the incident will serve as a reminder that we should continue to enhance our defenses against cyber threats to protect the financial system. looking at how the financial space is doing here. Finally, the terminal is back here, but you can see most of our major players here are in the red. In fact, the whole index is down by close to 0.7%, with BPI leading losses down 1 3/10%. BDO and Union Bank also declining here. BDO down close to 0.7%, and Union Bank in the red, down by 0.6%. The PSE posted a record high net income of over 900 million pesos last year. That's a 40% increase year-on-year, which eclipsed the previous high of over 860 million pesos set in 2014. Operating revenues of the PSE rose by over 25% year-on-year, with all of its operating revenue sources posting double-digit gains. PSE President and CEO Ramon Monzon says their good financial position has allowed them to pay a total of 11 pesos per share in regular and special cash dividends this month. He adds that this year's total cash dividend is also the highest amount ever distributed to PSE stockholders. NLEX Corporation is looking to start the construction of the 5.5 billion peso third Candaba Viaduct later this year. The Candaba Viaduct is a causeway allowing motorists to traverse the section of the swamp between Pulilan in Bulacan and Apalit in Pampanga. The firm is now in the process of selecting a contractor for the project. Construction is expected to start in third or fourth quarter this year and may end in 2 years. The Securities and Exchange Commission is warning the public about the illegal operations of 3 online lending firms and an unauthorized investment firm. The Commission on Bank issued an order directed to Golden Cash, Help Cash, and Grace Cash to immediately stop their activities and abusive collection processes. The SEC said the 3 lending companies are not registered as corporation with the Commission. In a separate advisory, the SEC also warned the public about Lee Fire Philippines for enticing the public to invest without license or registration. The COMELEC says it's all systems go for the upcoming May polls and that suspending the elections is not an option. Greg Gregorio has the report.
A little over 1 week before the May 9 polls, the COMELEC admits they've been warned against the possibility that the election could be a COVID super spreader event.
Data shows na after elections, merong high probability na magkaroon ng spike tayo kasi sa elections ay super spreader events, sabi nila.
But the poll body said they have contingency measures in place. This includes setting up an isolated polling place in every polling center, which will be beneficial to those voters who would be manifesting symptoms like body temperatures of more than 37.5 degrees Celsius upon arriving at the polling center.
Hindi natin pwedeng i-deny yung karapatan nilang bumoto kasi on election day, wala naman nung makakapagsabi kung may COVID.
The health department has also just detected the country's first case of the Omicron subvariant BA.2.12, a 52-year-old Finnish female who arrived in the Philippines early April and went to Quezon City and Baguio City. But with this continuing threat, is the COMELEC considering a possible suspension of the upcoming elections?
I don't think we can postpone an elections. We have already prepared for any eventualities. We have the supplies ready.
According to the COMELEC Shipping and Packing Committee, they have completed the dispatch of ballot boxes and transmission devices. Meanwhile, the delivery of consolidated canvassing machine systems, laptops, vote counting machines, and VCM external batteries is also nearing completion, while the deployment of official ballots, which only started on April 20, is now at almost 50%. COMELEC Steering Committee Head Commissioner Marlon Casquejo even added that they have already prepared 8 regional repair hubs for VCMs across the country. And so with all of these, the Commission maintained they are already prepared for any eventualities. For News 5, Greg Gregorio, we are One News.
Okay, let's do hope, of course, for a smooth elections on May 9. And that's a first look into the business day this Friday, April 29, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess De Los Santos. Mask on, wash hands, and stay safe. Philippines, have a great weekend. We are One News.